Hi, and welcome to this week's Market Insights. Now, the markets are under pressure at the moment as traders navigate constant updates on tariffs and then their delays and then the tariffs coming back again, with no clear signals on how the economy will react to Trump's levies as and when they're in place. Volatility remains high, and this week, major economic events could shake the markets even further. So where to start? Well, let's start with the US. And this Wednesday at 3:30 GMT +3, all eyes will be on the US inflation report. Given the current risk-averse sentiment, the data could send shockwaves through the markets. And with the Federal Reserve meeting just days later on March the 19th, analysts expect interest rates to remain between 4.25% and 4.5%. However, any surprises in the inflation numbers could trigger significant moves. Last month's inflation report showed higher than expected numbers, signalling stalled progress in curbing inflation. That led to a short-term appreciation of the US dollar. Now, will this trend continue? Well, who knows, but stay tuned. And also, what impact are these tariffs going to have? Keep your eyes and your ears open. Okay, this time, it's Canada's turn. Also on Wednesday, the Bank of Canada will announce its interest rate decision. Now, just a week ago, markets doubted a rate cut was coming, given the pause in tariffs and strong January job data. But sentiment now seems to have shifted slightly. Most expect the Bank of Canada to cut rates by 25 basis points, regardless of whether tariffs are imposed or delayed again. Now, in January, the Bank of Canada made the same 25 basis point cut, which was already priced in. However, the market still saw heightened volatility after the announcement and during the press conference. This time, the press conference will be crucial too, with everything that's going on, and it could offer some quite clear clues on the Bank of Canada's next moves. Okay, back to the US, and on Thursday at 3:30 GMT +3, we get another key economic release, the Producer Price Index. Now, last month, the index increased by 0.4%, higher than the expected 0.3%. However, some report details suggested easing inflation pressures, pushing stock market futures higher and Treasury yields lower. Now, this week, don't just watch that headline number, look deeper into the details to stay ahead of these market trends. Well, that wraps up this week's Market Insights. Remember, geopolitical and economic events can spark volatility and unexpected price movements. This toing and froing with tariffs is also having an effect. So stay informed and stay ready. Check out our news and analysis section for real-time updates. Thanks for watching, happy trading, and good luck in the week ahead. Bye for now.